Hey, gang, good morning. Happy Tuesday morning. So, kind of an interesting morning with futures this morning. And what we're seeing is something we've been talking about for the last few days. I tell you, we recommended in December that our members start building some great stocks into their portfolio, much like the stock we talked about 2 days ago with you guys, CCI, Crown. Uh, Great company, great product, great service, great balance sheet, and great dividend. Built to weather all kinds of storms, right? Good weather, bad weather, this thing they'll do okay. And we kind of recommended that, guys. And you're probably thinking, well, we're an options traders. What are we doing talking about a stock I'm going to put in my portfolio for years? Well, there's something happening with the market right now, guys. And we advised our members about this late December, and they started building for it. What you're seeing is a rotation in the market right now out of these high flying techs and things like that. That's why you see Apple struggling so bad, Microsoft struggling so bad. Tesla has made a bear move right in the last 2 days. It's down about 20% from its high. Um, just all this kind of stuff happening, but yet you're seeing a lot of these boring stocks, right? Boring stocks just doing well. Coca-Cola, we got a short in Coke out till April. Um, and we've got some puts on Coke, and we bought them right before earnings. That's pretty much right. We've been talking about what we're playing right now. We got a little short in the Spider going on. We got a little short in Coke going on, and we've got that those puts on the VIX just in case that market blows up again. We can tap that out real quick. We're a little bit covered, but we're real light, right? We've got 3 option plays on the table, and we've got a bunch of stocks in our portfolio. Why would we do that when we're options traders? Well, you have to make money consistently, right? And the market changes. And we've talked about this many times. We talk about it with potential members and stuff. The market changes, and your strategy has to adjust with it in order to be most successful. You can sit here and you can slave labor for 10 hours a day over charts and ticks and everything else, but there's a smart and simple way to maintain and manage and build your money. And that's the way we do it. So like I was saying, about a month ago, 2 months ago, we started recommending to our clients, and we gave them actually a list of some great stocks, and we even built a portfolio out of it on sample portfolio so we can do a case study on it. And that portfolio is doing pretty good. Uh, Make sure you guys take this to heart, guys. This is coming from an options trader. Okay, guys, buy some stocks. Let's go look at the CNBC for a second. Okay, guys, together. And you see how that CNBC got Elon right on the front cover. Futures this morning. Here's what I'm talking about, guys. With your futures, you see yesterday's market, right? We opened up ugly, ugly, right? On the Dow, everything looked ugly. By the time the day was over, the S&P was still down. The NASDAQ was really down, but the Dow had turned green. Why does that happen, guys? Well, just like I said, you look at your Apples over the last few days, you look at your Microsofts, right? These are actually companies with great balance sheets and dividends, but they're tech. So they're just getting caught up in the tech sell off. Probably good buying levels if you want to own some Apple, if you want to own some Microsoft, maybe even Tesla too. But what's happening is you can tell there's a rotation going from money into your short term, your high risk plays, your fast money, right? Like your SPACs and your Teslas and all that stuff, right? And it's moving into your boring stocks, right? Because people are seeing what the kind of the writing on the wall, right? We've been talking about. We're not getting the unemployment growth we need. We're not opening the economy the way we should. Look at England yesterday, Boris Johnson and the plan they laid out. Very specific, very, very, a little bit optimistic, but a plan. And they're moving forward on it. If all works out by summer, they've got an economy that's open. We're sitting here with the US economy right now. We've had a vaccine for 3 months. We've had a new administration get settled in, and yet everything is stuck in the mud. But something interesting is happening, right? What's happening, guys? We've been talking to you guys about that the last few days too. Rates are rising. Now you have a Fed that's behind the 8 ball, right? How do you combat inflation? How do you combat it? Well, you raise rates. Well, you can't raise rates because you kept them almost at zero. So you can buy some treasuries and keep the economy stimulated and the market stimulated. So today, Jerome Powell will be making a speech. He's actually got a couple this week. This will be the first one. that market's going to be hinging on every word. But like I said, the smart investor, our members did this a month ago, but a smart investor is taking some of that risk money and putting it in something more stable that'll work for them. Remember, if the market does go through a rough period, right, you want your stocks working for you. And that's what a strong company that's got a good dividend will do, right? If it does go down temporarily, we've seen it with Apple, we've seen it with any other great stock. It'll have moments where the market's just bearish and it'll go down, but that dividend is buying you more and it's buying it for you cheaper. It's cost averaging for you, very passive, right? So that's important. And Coke is a great example of that because Coke just had good earnings and it's hasn't been able to get over that 51 spot. And it's kind of sluggish. You can see the trading in it sluggish. It looks like it wants to go down, but it's holding on a little bit. Why? Because people are moving their money. Coke's a good dividend stock. So there's some good buying going on right now. And that's a good example of it. You see how your money goes from your exciting stock like Tesla, no dividend, right? The only benefit to Tesla is price acceleration. Well, you're now down 20% from your high. So you're not getting that. So why own Tesla? Well, better to own Coke, right? At least I get that nice dividend. For you guys looking for some of those stocks, we gave you CCI the other day. Look at utilities. But until we get this report from Jerome Powell today, guys, it'll probably be a weird market. So you guys stay cautious. Like I said, we're options traders. Usually we have maybe 5-6 option plays on the board at any given time. Right now we've got 3 and they're very, very low risk plays. So we recommend the same. Just be cautious in this market, but make sure, guys, don't fall into that BS that you see on Instagram and all the medias and stuff like that. Buy, sell, buy, sell, buy, sell. Take a nice part of your portfolio and park it. Park it in something that you're going to send to work and it's going to bring you home a paycheck. And that's a good dividend stock with a balance sheet, strong balance sheet, right, guys? So anyways, guys, you have a great Tuesday. Okay. We'll be back tomorrow morning. Again, stay cautious. Let's see how this shakes out. Probably won't get much action until we see this Jerome Powell speech. Then the market will probably react to that. Home Depot had earnings last night and it was good. Another telltale sign is Home Depot. Think about this, guys. We are deep into the first quarter of the year already. There's all this talk about second quarter, third quarter growth, right? We're not seeing nothing in the first quarter. Home Depot released earnings. They refuse to give guidance. Why? Because they know there's a good chance that this economy is not going to be getting the kick in the butt that it needs from opening up and stuff like that. And so reason they don't do their forecast is it's this simple for Home Depot. If the economy stays closed, that 25% same store growth that they got last quarter, they'll get another one, right? There's no competition. But if the economy starts opening, people have options to spend their money at, then you're going to have a soft quarter, right? You're not going to have all that COVID love you had the last 3 months. So Home Depot, instead of saying that, they just say, oh, well, it's a risky situation, so we're not going to give guidance. But the truth is, if the economy opens, they'll do bad, and they just don't want to admit that if the economy stays closed, they'll do good. So it was a telltale sign, and that's another thing too, guys. I'll close on this. Look for these little signals, guys. Don't get so enamored and caught up with these experts and stuff on CNBC and Fox Business News and stuff that are always yelling and screaming, waving their hands. Well, I'm waving my hands, but I'll put them down. But don't get enamored by that, guys and girls. Because really there's little signals that you can catch, just like mixed markets. How is the market mixed? Where is the green going? Where's the red going? And you can see rotations and things like that. Be patient with your trading and make your own decisions. All right, guys. Look, if you want to be like our members and you want to have a 2-month head start on whatever the market's doing today, click that link below. All right, guys. You guys have a great Tuesday. I'll see you guys tomorrow morning. Other than that, the trade team will post some articles on the site and stuff. You guys enjoy the reading.